But what's been very, very active is real estate. And this is, the reason why we're doing this chat today. The case for the chat is that the stocks are active, maybe because of technical reasons, but the real estate demand continues to be weak pan-India. Developers are burdened with high inventory levels as well. And there is deceleration in the residential prices across India. Mumbai may be an exception, but across the board, we're seeing some downtick in prices as well. So how good, at best, can the real estate scenario get in FY16? That's the question that we pose to Mr. J.C. Sharma of Sobha and Mr. Varun Gupta of Ashiana Housing. Both the gentlemen join us on the show. So good having both of you. Thank you so much for joining in. Mr. Sharma, I'm starting off this discussion with you because you probably cater to what has arguably been the strongest market in the last 6 months. My question is, despite that, you wouldn't shy away from telling us that inventory problems are existent for developers in that region as well, which is Bangalore. And you now operate in some other markets as well. How can FY16 turn out to be a good year for real estate companies when there are burdens of debt, when the inventory levels are high and prices are not moving up?
It's a very fair question. Today, if you really look at the demand across India, and somewhere including in Bangalore, it has not been up to the expectations of the real estate developers, generally speaking. And this has also resulted into somewhere debts having gone up. It has also resulted into somewhere the ability to price the product getting impacted. But if you look at in totality, we are also exaggerating the situation. The inventory is to be sold inventory. It is not that we are carrying the finished stock inventory anywhere. Maybe in some pockets here and there, but generally speaking, the developers felt bullish about the Indian economy, and they truly believed that it is right about time for them to ensure that they launch more number of projects so that they can offer products at right prices. Thereafter, the economy did not perform to our expectations and the interest rates had not come down. As it looks to us, all those things are changing for the better, and we are quite confident that in this financial year itself, that is 15-16, as far as we are concerned, we should be doing better than what we did last year. And as far as the industry is also concerned, it should be doing significantly better than what it did last year.
Mr. Gupta, what is your sense? While affordable housing really, I should say, it's not even a lack of demand, it's more a question of lack of supply and an acute lack of supply, at least in the region where we're based in, that's Mumbai. But what is the sense that you're getting? Now with the 75 bips easing of interest rates, does it seem like this segment could see some traction, and more importantly, does it now become commercially viable for developers such as you to get into the affordable housing segment?
Miss, first on the interest rates front, the 75 bips really is not translated into reduction in home loan interest rates by 75 basis points. So till the transmission really happens of interest rates to a significant level where it's 75 bips and also further rate cuts which really need to translate into home loan to improve affordability, the interest rate is not a factor that's playing out as of today. The affordable housing sector, yes, it remains a supply situation problem where to get land which is viable in close proximities to city and then put up a product that's affordable is next to impossible, or I would say incredibly difficult. So therefore we also shy away from being in that space and prefer to be in a space which is more middle class and middle income dominated. I think the new Housing for All scheme that the government has taken out, if implemented properly coupled with the kind of infrastructure thrust that the central government has put in, will improve the supply side situation and affordable housing and make it more viable. But then again, it's a much more longer term outlook than a one-year event. To build the infrastructure and to put this scheme into implementation will take a lot longer than 6 to 9 months.
Varun, but what about the general affordability in the low-cost housing? Low-cost housing is called low-cost housing because it has to be affordable. And if the interest rate transmission will not happen, do you think that area or that pocket of the housing market will not pick up?
Well, two things on that, Nikunj. I think one thing that has happened is since prices have not gone up in overall real estate over the last 12 to 18 months, but salary increments have continued. I think with one more round of salary increments, I think overall affordability of people will increase because their incomes will go up. Second, the interest rates transmission are required. If they don't get transmitted, affordability will continue to remain challenging. But my view is that with now monsoons being good and inflation expectations getting anchored a little bit downwards, the overall long-term interest rate should start going downwards and therefore getting reflected into longer term borrowing rates as well, in terms of lending rates of, because again, housing is a 20-year mortgage, a 15-year mortgage. They are less influenced by the short term rates and more influenced by the long term interest rates scenario in the country.
Mr. Sharma, just wondering as to, without getting into specific numbers, how would FY16 turn out for a company like yours, so to say? The reason I ask you this is that on one side I see developers like, say for example, a Lodha, which are big in Bombay but continue to become bigger in Bombay. They are not venturing out too much into other areas. On the other side, I have a Sobha Developers, which is very big in Bangalore, but still looking to get out into other markets, despite the fact being that Bangalore has been the strongest real estate market in the last 6 months. What's the strategy here? Why this move, and how will it augur for you in FY16?
See, we have given a guidance that vis-a-vis about 3.3 million square feet of new sales in the last financial year, we should be doing 4 million square feet of new sales in the current financial year, despite having the clear visibility that the first 2-3 quarters may not be that great. Our hope is based on a couple of developments which we believe will go a long way in achieving the targets. One, in Bangalore, we have launched a very large project which is through the precast, where the product starts from 35 lakhs rupees onwards and goes up to 75 lakhs rupees. This is the market which we believe should be growing faster than the other categories what we have. Secondly, we have also lined up launches in the other cities like Chennai, Pune and in NCR, which should give us incremental volume. We also strongly believe that what Mr. Gupta was talking about, that interest rate transmissions, it is about to happen. Somehow banks have their own problem and these rates have not been transmitted. But with the deposit rates coming down and the government very clear on passing on this benefit to the end consumers, this kind of rate reduction will go a long way in reviving the demand. If you look at why Chinese economy had been doing well, it is primarily there where the manufacturing sector and the housing sector had contributed to their GDP, and today consumer pays about 5% as interest rates, whereas in India a consumer pays about 10%, which means per 100,000 more than 300 rupees is his EMI excess payment on a 20-year loan. Once this differentials, it gets bridged, in our view, the housing demand will take off in a big way.
Right. Varun, so let's get closing comments from you. It's a well-known fact that the Indian real estate sector currently has stagnated. It is going through a painful patch. So when we started the year 2015, it was public knowledge that we should not expect anything great for the real estate sector. But what are the trends indicating? Has 2015 so far been a better year than your initial assumptions and projections, or it is a poorer year in terms of your initial assumptions and projections?
It has been a poorer year as compared to our assumptions, as we also had hopes with the economic revival coming in. But I think overall employment generation is not kept pace as to what we think. The interest rates have also not transmitted. Our views are, as those two things specifically happen, the sales velocity will increase as and when interest rates come down and employment generation picks up in the economy. That will be the two twin events which will be very, very key to overall demand revival. And I think it's also going to be a year specifically for us and overall for the industry where there is a lot of work in progress inventory. It will be a focus, I think, of us specifically to focus on execution and ensure that we are delivering on schedule, to ensure that the consumer confidence that has somewhat got lost in the real estate industry picks up and builds and people start believing in the real estate story again.
All right, we hope that FY16 turns out to be a good year. Thanks so much for taking the time out and joining in this discussion, gentlemen. Really good having you. We of course talk about Sobha developers in a few days' time from now when they release their quarterly numbers or how the sales numbers have been as well. So it'll be interesting to see the company then. But the markets at large